And I want to bring in two of the most brilliant thinkers on the economy that I know, BNY Mellon's investment chief strategist, Alicia Levine, and ADP, their chief economist, Nela Richardson. Alicia, just should household checks, do you think households should get checks in the next round of stimulus?
So, hi, Charles. Nice to see you. Yeah, I do think that there's an argument for this, because if you think back to March, that stimulus really was only meant to be a bridge for about 3 to 4 months. So now the pandemic has gone on much longer. We're going to start vaccinating people next week, probably, but there are still 10 million people who are unemployed as a result of the pandemic, even though we got 12 million jobs back. So the bridge is longer than originally expected, and these people really should be taken care of until we can get vaccinated and the economy get back to some sort of self-sustaining cyclical run here.
Nela, you're now the chief economist at ADP, so first of all, congratulations. And what does the best fiscal package look like for you?
Thank you for that, Charles. The best fiscal policy I can think of is one that'll pass Congress by the end of the year. I totally agree with you when you say don't let the perfect be the enemy of the good. We need stimulus as we approach the end of the year, because a number of those CARES package relief options expire at the end of the year. That means enhanced unemployment benefits. That means student loan debt deferral. That means rental eviction moratoriums. All of that stops on December 31st. So if you can get a bill passed that will help alleviate the pain to come and help be a bridge, as Allison said, to a time where we can re-engage in the economy healthily, then that is the right package for now.
You know, we learned recently from the October Fed survey of senior lending officers that credit standards have tightened a lot for consumers. And then today, according to Biz, big banks, they're only approving 13% of loans to small business applicants. Small banks, only 18%. To put that in perspective, a year ago, it was over 28% and 50% respectively. And Nela, let me go back to you quickly on this. It feels like banks have abandoned Main Street in small town America, or small regular folks. How do people survive if they can't go to regular lending facilities and get credit?
Well, you know, the Fed did a lot at the early part of the year to make sure that these credit facilities were available to help secure the flow of funds to hard-hit businesses and consumers. Some of those programs actually expire at the end of the year. But what's important to acknowledge is that banks are actually part of the solution this time around, far different than in the great financial recession of 2008, when banks were the problem. Now they are more healthily capitalized, and so they can be that flow of credit. So I don't see banks abandoning consumers now.
All right. Well, those we'll see. Hey, real quick, the mood of big business, on the other hand, is on the upswing, and I'm talking big time. The CEO Roundtable Conference at its highest level, confidence at its highest level since the second quarter of 2019. They've got plans for hiring, cap investments. Those are going up. They see sales expectations rocketing higher. All of this in the last 3 months. And so, Alicia, I want to go to you, because big business is saying we're doing fantastic. It's only going to get better. What does that mean for the economy? And also, what would it mean? How would it inform you with respect to the stock market?
Look, it means that there's going to be a boom in 2021, that when we get through some of the slowness in the economy, as we vaccinate people and people get back out there, demand increases for services, you're on a roll. And so it's actually very positive for the stock market, because it probably means that earnings have to move higher. We'll get higher investment. We'll have people working again. I mean, in the end, the issue of delivering checks and delivering unemployment is not meant to be a permanent solution, as you pointed out. It's meant to be crossing over to the other side of the recovery. So actually, these numbers are very exciting, particularly on the investment and employment side. Something to look forward to next year, and positive for markets.
Alicia, Nela, thank you both very much. Always appreciate when you guys are on, or you ladies are on. Fantastic information.